Now we look at the raging debate in the digital assets world. Can cryptocurrencies be a part of central banks' foreign reserve portfolios? The World Bank's white paper on crypto's role in foreign reserve portfolios argues not today and likely not in the near future. Our next report telling you more.
The increasing market capitalization, footprint and structure of crypto assets have prompted institutional investors and central banks to investigate potential exposures to these assets and determine if it is fair to include them in their portfolios. While crypto assets might play a role in central banks' reserve portfolios in the future, a white paper from the World Bank states that these instruments do not qualify at the moment in their current state. There has been some guidance from policymakers and standard-setting bodies. However, the regulatory landscape for crypto assets is still unclear. Their value is very volatile, which makes them unreliable as a store of value. To qualify as instruments for reserve portfolios, crypto assets must undergo certain fundamental modifications. Decreased volatility needed. Crypto assets are not a good way for central banks to self-insure against shocks because their prices are highly volatile, with an annualized volatility of 70%. This is far greater than the volatility of equities and gold. Stronger custody and safekeeping solutions. The loss or theft of crypto private keys, which are essential to digital assets like bearer instruments, might result in irretrievable loss. Essential for storage, access and authentication are industry-grade solutions for managing and executing private keys that can resist fraud or cyber attacks. More than enough decentralization. Potential dangers exist in crypto asset initiatives that are not adequately decentralized. So, they are subject to substantial control by a governing body or central party. Large investors are hesitant to take on and manage substantial exposures to crypto assets. This is due to their limited liquidity and market capitalization compared to more traditional currencies and asset classes. However, derivatives markets have developed to control risks. The liquidity of the biggest crypto assets, such as Bitcoin and Ether, has greatly increased. Investment tools are readily available. Government bonds and other extremely safe investments are the norm for central banks. For the most part, crypto assets don't perform anything useful on their own, like generate interest or dividends. There are still many unknowns and dangers in this experimental environment. This is despite the potential for staking to create revenue, and the potential for DeFi apps to aid in the generation of returns on crypto assets. Implementation of banking and commerce protocols. Crypto assets must become a tool for cross-border investment and trade flows. This is to ensure reserve managers against trade and financial shocks. In such flows, crypto asset adoption is quite low. Policymakers have achieved some headway into most of these concerns. However, there are still many important questions about the domestic and international regulation of crypto assets. This includes the authority, missions and instruments of relevant institutions. Business Report WION, World is One.
And for more on this, we're now being joined by Sharat Chandra, founder of Empower Edge Ventures, live from Bengaluru. Welcome to the broadcast, Mr. Chandra.
Thank you. Thanks for having me.
Now, Mr. Chandra, there is a wider adoption of cryptos now. What is your take on crypto's growth as a mainstream asset?
So when it comes to mainstream adoption of crypto, I think crypto is gradually getting there. But when it comes to crypto being a reserve asset for central banks, I think a lot needs to be done in terms of liquidity, in terms of making sure we have the right custody frameworks in place, and also the right regulatory frameworks in place. Because in times of crisis, central banks would not like to invest in an asset which is illiquid, and there's no regulatory clarity on that. So as in when we have the right regulatory frameworks, that maybe a couple of years from now, crypto can be looked at one of the reserve assets, but not in the immediate future.
Right, Mr. Chandra, now the World Bank's white paper argues against cryptos as foreign reserve assets in its current form. What is your take on their statement and their stance on cryptos?
I completely agree with the findings of the report, and the report specifically highlights about some of the challenges which the crypto space faces, especially in terms of security. And I kept on saying about the custody of these assets. There are multiple hacks which happen, and hacks are not something which are uncommon in the space. There's already one of the biggest hacks in a crypto exchange. But as and when more institutional participation comes in, and this is where the likes of BlackRock and others are coming, BlackRock, Fidelity, as and when we have more structured products, and from a couple of years from now, maybe 3-4 years, we'll hopefully have more regulatory clarity, global consensus on regulation. That's when some allocation of assets when it comes to crypto can be done by regulators across the globe.
Right. And what, according to you, are the risks to reserve managers looking at cryptos as foreign portfolio assets?
Right. I would say first is trading volume. Trading volume is still pretty low as compared to the traditional reserve assets, like say gold, and the illiquid nature of this particular asset, right? And there's a lot of price volatility. So in terms of crisis, reserve assets should respond in a more, I would say, sensible and more stable way. So look at the current global macroeconomic scenario where gold is arguably positioned as the preferred reserve asset, right? In terms of crisis, there's already a lot of discussion going around de-dollarization and on all the aspects. Even the US, some economists are propagating that they should look at gold as the reserve asset as compared to the US Treasury bonds or T-bills.
My last question to Mr. Chandra, what is your view on crypto regulations currently in place?
I think this landscape is evolving, and it appears to be complex, but globally, and again, under the aegis of G20, hopefully we should have some regulatory clarity in place when it comes to global regulations, because one of the recent meetings of FSB, Financial Stability Board, they recognize that there's a lot of fragmentation in terms of regulation. Certain jurisdictions, they follow different regulation, and it creates regulatory arbitrage and a loophole where maybe bad actors can come in and exploit that. So a global consensus is needed, and hopefully we should have a framework in place.
Thank you, Mr. Chandra, for joining us on the show with your insights on this.